Welcome to Good Game, your no BS insights for crypto founders.
I think the trade war is worse than what people expect it to be in terms of outcome and impact on businesses and consumers and markets. I feel like just anecdotally, over the last few weeks, retail are still in the buy the dip mode. I feel like people are still in the mindset that the Fed will save them, save the market.
Yes.
And they've been buying, and there's no sign of capitulation really. And at the same time, the US stocks are still very expensive.
Looking for your next startup idea in crypto? Check out our request for startups list and get inspired at alliance.xyz/ideas.
And you know what I was just thinking?
What?
The Trump insiders are probably making billions of dollars insider trading over the last few weeks. And yet Eric Trump bought the top and sold the bottom on ETH.
Do you think that was just an illusion, or is that just pure stupidity?
Maybe both.
I think it was a mix of both. He was trying to front run his dad, but then his dad just kind of fucked him over. He literally sold the bottom of ETH, right?
Yep, it's on chain.
It's insane. And then I saw this, and then I think he used the cash or some of the cash to buy Say. Did you see that?
Interesting.
Yeah. And so I think partially there was an announcement World Liberty made, or whatever the name of the company is, and they said like, hey, we'll buy X amount of your tokens if you buy X amount of our tokens.
Yeah, that was a while ago. Right?
Oh, that was a while ago. Okay. Yeah, it was like it's like a 3-3 pretty much.
Yeah, that's a 3-3.
And
3-3 with the Trump family. With the powers that be.
Oh, did you see the announcement? Did you see Movement Labs, Rushi?
Yeah, what happened? What was the news?
I don't know, but the 0x Balloon Lover, that account has been shitting on Rushi and Movement over the past like 6 months, talking about, I don't know, insider trading, manipulating the token price, working with market makers that may not be as professional. I don't know the full details there. And then like at an event in China, somewhere in China, something erupted. A bunch of like people that were like farming the airdrop were pissed and like kind of froze up the event that Movement was hosting. And so then that went viral. So there's just been this online like kind of shit talking from a lot of influencers talking about how Rushi's not handling the token launch properly. And abruptly, a couple of days ago, Rushi said that he's gonna take not a permanent, but a temporary leave of absence.
Okay.
And that's kind of where it went. We don't know much more about it. But yeah, if you want to talk about that.
I don't know. What is there to talk about? Like, has he sold his tokens?
Well, we don't know yet, but okay, Ohm Labs or Ohm, there's not enough disclosures with market makers publicly with founders. There's an exchanges. So a lot of these tokens, they seem like they're great tokens to buy based on what you hear and see on Twitter. But it turns out a lot of this could be manufactured.
How did Ohm like go down 90% in a minute?
There isn't a clear story, but someone's like pulled a bunch of tokens out from the market and sold it. They just dumped it.
Is it the market makers or one of the insiders?
Right now, someone pointed the finger at Laser Digital.
Okay. Is that a
Laser Digital?
maker?
They're like some trad firm in like Southeast Asia or something.
Okay.
And they came out and said that they didn't do it. But then Hasib brought up was it Hasib? And a couple of others brought up the point, like, there's actually no like transparency framework involved as to how tokens get listed, market makers, like a lot of those areas are quite dark right now. And so people get manipulated into buying prices of tokens that may or may not be actual real value of what the market's asking for.
Yeah.
So we're seeing a lot of that.
I mean, this is annoying because this was the problem that Masari set out to solve in 2017.
That's right.
And it's been 8 years and it's still an unsolved problem.
Yeah.
Like who owns what tokens, who is selling them? Because in TradFi with the SEC, like whenever you're a major shareholder, of a company and you're selling, you have to disclose it immediately, like usually within like a day or two. Like whenever Warren Buffett sells shares of a company that where he's a pretty big holder, I think the number is over 10% of the shares. I always get a email of the SEC disclosure. So I mean, there is a reason why these things exist.
Agreed. I think it's just the permissionless nature of the market where there isn't enough frameworks, regulatory, no one is really taking ownership of what this should look like from what I see. They even talked about how we should have like quarterly earnings process as well.
Yeah.
Every quarter we should get on a call, go through a framework of what we've done, what we're about to do, and like put up some forward guidance as far as where we think the market's going to go and the company's going to do. So I
mean, the nice thing about crypto is you can do this daily, not even quarterly.
Yeah.
Because everything is on chain.
Yeah.
If someone sells their insider shares, it's on chain, and all you have to do is to link the address to the identity of the owner.
Yeah.
And then you get automatic disclosure.
Yeah.
On a real-time basis. And this is something that TradFi cannot do.
Yeah.
Which is why they do quarterly reports and stuff like that.
Yeah. So I guess the question then becomes, who takes ownership of this? Is this something like a Binance would do? Is this something like a Jupiter would do? Or is it just more, kind of like an SRO, like self-regulations, where we just kind of...
This was the conversation that we had at Masari 7 years ago. And unfortunately, it turns out that this is not a problem that a startup can solve. Like Masari back then was like 5 people.
Yeah.
This should be a problem that the big exchanges and other players at the top of the food chain should get together and solve together. And unfortunately, that's not happening. Like, it's definitely the responsibility of Binance and Coinbase and others.
Yeah. Yeah. So I'd be curious to see how this would work. It would have to be some sort of alliance between exchanges, market makers, founders for this to come about. But I don't think this is going to happen within the Trump regime.
I was thinking the other day, if this whole thing about tokens, put it plainly, if crypto failed, it would have been the biggest counter argument against the free market. Because in TradFi, you could argue that it's not completely free market with the regulations, the SEC, and all that. There is a central sort of planner that dictates some rules. And in crypto, we don't have those rules.
Yeah.
And it might just be the case that those rules are actually necessary. And a 100% completely free market may not be the ideal way about doing things. Maybe it should be 90%, right? There's a 10% that should be planned centrally, regulated centrally, right?
Yeah, I'd agree with that. I do think just a layer on top that slightly regulates how things get processed, IPO'd or ICO'd in our case, and then putting some like rules. So I was reading through Snapchat. Evan, the founder of Snapchat, he did a recent talk. And one of the things that he talked about was when he went to go IPO, it made them much more operationally efficient, both from a back office perspective, from a user acquisition perspective, and put things really, it helped him like run a tighter ship. And so I do think there's some positives in having this, because it forces founders to figure out, how to manage their capital much more appropriately, how to figure out user acquisition, if you're releasing a new product. It forces the founders to think not just from a 6 months to 6 months perspective, but probably 5 to 10 years out. And so I do think that's, there's some importance to having some slight like layer of operational excellence by going public.
Yeah.
So I saw yesterday, I posted in our chat about how OpenAI tried to acquire Windsurfer.
Yeah. Windsurf.
Oh, Windsurf. Sorry. I'm thinking Windsurfer.
Was it like $3 billion?
$3 billion. And they approached, apparently, OpenAI approached Cursor 2 times.
Okay.
To acquire them. And they said no.
Okay.
And so then they went out and acquired Windsurf for $3 billion.
Yeah.
There's a lot at play, right? You could think of OpenAI as kind of like I don't know, like layer one, right? And then you have these apps that are being built on top, sort of, right?
Yep.
And whoever has the most apps gives them the best models, then that attracts more people using the product that helps them then build more apps. Is that the way to think about it?
Well, there's two things that I thought of. One is that so far, OpenAI has not produced the best-in-class coding models yet.
Yeah.
They've been trying to.
Yeah.
But Anthropic is probably the leading model when it comes to coding.
Yeah.
And Cursor and probably Windsurf are both using Anthropic. So from OpenAI's point of view, they do want to build the best-in-class coding model, but that requires a lot of data. And where do you get the data? Well, you can get the data by buying the data from some companies that specialize in data labeling, right? So like Scale AI, but for actual coding data. But another way to get those data is basically to get it directly from Cursor or Windsurf. Because when you actually use Cursor and Windsurf to code, you're effectively giving data to Cursor and Windsurf, right? Because you prompt, you ask for suggestions of code, and you accept the code, right? You accept the suggestions as a user, right? So that is effectively some sort of labeling on the output of the model.
Yeah.
It's almost like reinforcement learning with human feedback. And so this data is very valuable. And that's why OpenAI wanted this data. That's why they wanted to buy Cursor, and Cursor refused them. And then now they got Windsurf. So that's the first thing that I thought of. The second thing that I thought of was that those big AI labs are probably seeing where the puck is going, which is where the eyeballs are, where the users are. They are probably worried that the underlying model themselves will get commoditized over time, which is the same story as in crypto, right? You have the layer ones that are increasingly likely to get commoditized over time, and it's the app layer that's going to capture a lot of value. So by acquiring an app that already has a lot of users, like Windsurf or Cursor, they can solidify their position on the app layer. Because ChatGPT is an app, right? ChatGPT is an app that is built on top of all the various OpenAI models, but they want more. They want the coding apps and maybe something else in the future. So that's where I think they're going with this acquisition.
To me, this seems more analogous to like a super app.
Yep.
Where, and I'm sure you've seen the announcement around, OpenAI exploring ideas around social as well. And it's almost as if it's like a one-stop shop to experience AI in different modalities, whether it's coding as one aspect of it, whether it's photo, video generation to create content and story, or whether it's just general intelligence and just understanding the day-to-day stuff that you would use Google for as an example. It's interesting that it's playing out that way, because you could argue that there's, for every category that OpenAI introduces a product for, it cannibalizes like hundreds of startups that are building for that specific sector. I mean, like even within Alliance, we have, and we carved out a very specific niche around like a Lovable for crypto, as an example, to build apps leveraging crypto. And we think there's a unique moat there because of the crypto aspect of it. But you could argue, a lot of this stuff could be cannibalized by the larger players.
Yeah. Actually, Vinod Khosla, he said, like, was it yesterday? He said like half of the YC batches are basically dead every time a new foundational model comes out.
Yep.
Not dead. Of course, they can always pivot, but their current idea is no longer viable whenever a new foundational model comes out.
Another interesting point, I don't know if you saw that graph, but there's a graph of like 6 VCs, Index Ventures, A16Z, Khosla Ventures, maybe Lightspeed, I forgot the others, First Round, etc. And it talked about how all of the major AI companies are overlaid over it and like who made the investments, right?
Yeah.
So all the VCs in that had, investments into 2 to 3 of these startups.
Yeah.
Vinod Khosla had only one investment that was in OpenAI in the early stages, and that was it. Funny enough, I was talking to Founders Fund yesterday, and they've only made one investment in the AI space, and that was primarily OpenAI. They have some like one other smaller investment in like some other AI company, but that's a very specific niche. But when I was talking to them, they said Peter Thiel's he does not want to overinvest in AI. He thinks it's all going to get cannibalized like the dot-com bubble. And so he told the team very specifically that don't focus too much on AI because it reminds him a lot of the dot-com bubble.
Yeah. I remember he said that even maybe half a year ago. I think on All In at the All In Summit.
Yes,
I watched that interview.
Yep.
He drew the parallel between AI and dot-com bubble.
Yeah. And so he reiterated that I think they launched a new fund recently. And so he reiterated the reasons again why they should not be investing in AI right now.
Yeah. It's too consensus in a way.
It's too consensus. There's just too much competition. I mean, if you thought crypto was competitive at this moment, you should see what's happening in AI. I mean, we have a few AI startups in our current batch. And for every startup, there's probably like 25 to 50 startups that are competing.
I think right now the level of competition in AI, level of crowdedness is probably 1 or 2 orders of magnitude higher than for crypto startups.
That's right. I feel like crypto is non-consensus again to a certain degree.
It's actually gotten more and more non-consensus over the last 2 years.
Yeah. To the point where like they're trying to reframe crypto in a completely different aspect now, right? Like if you look at Zach, I think Zach's the founder of Bridge.xyz, and yesterday a week ago he put a tweet out saying that the next big platform should be stablecoins after cloud, mobile, and the internet, the cloud, and mobile. Then it's stablecoin, and so he completely cut out crypto from that conversation, right, as the next paradigm shift.
Yeah.
And so I thought that was also a very interesting narrative that they're trying to run over there.
Yeah.
It's probably because, crypto generally has received some bad like feedback, obviously because of the speculative nature of crypto, which in turn really just like kind of hurt our brand from a general perspective. So like high quality talent will probably less likely join a certain tech sector just because they see all of what's happening. Like if you see shitters on your timeline, are you really going to be excited about changing the world in the future? Probably not. But if you say stablecoin and you frame it that way and you say like, well, we're crypto, but not crypto really. We're stablecoin.
It's not a perfect analogy, but it feels like the Web3 fork from crypto 4 years ago. And then also the Bitcoin maxis have always been trying to stay away from being associated with crypto. So it's like Bitcoin and crypto, the two are mutually exclusive.
Yep.
And now it's stablecoin crypto, two distinct things.
I think it's probably for the better. People that are like, say, Silicon Valley, high quality talent, they may feel more comfortable joining this subsector as a way for them to differentiate from what they're doing versus crypto. Oh, I'm not crypto, I'm stablecoin.
Yeah.
Like, I don't know, whatever.
I mean, because they understand stablecoin. Stablecoin for them is very easy to grasp. Like even Bitcoin was not very easy to understand, but stablecoin is like, it's fintech. It's basically a fintech 2.0. It's payment, remittance, like all these things that traditional tech pretty much understands.
Yeah, so that's kind of the narrative. I'm indifferent about it. Probably good for crypto as a whole if we were to do that, I think.
Yeah.
Trade war. We're seeing a ton on the trade war side. Funny enough, Trump tweeted just today that we may have a deal with China soon. And then the market's pumped.
How much?
Fartcoin. Very nice. Bitcoin's at almost 85K again. Let me see. S&P 0.79 plus, almost 1%. So seems like I was listening to Powell yesterday. He was in Chicago, and I forgot who it was. I think it was the Fed from Chicago. Said like, "Are you going to step into the stock market?" And everyone laughed. And Powell said, everyone wants the Fed to step in or whatnot, but we think the economy is doing great. And really what's happening, and I think it's going to happen over the next couple of months, is that the market's trying to figure out and digest all of this new information.
Mm-hmm.
And until that's done, the market is going to be in like a very confused state as far as where to go next. So until that is completed, it's very hard for me to make any decisions, which, I kind of agree with that. Like, I mean, Trump is like tweeting this and that. I mean, there's no agreement in terms of where this is going to go.
Trump is trying to fire Powell.
Yeah, I saw that today. Like, what the fuck? I don't agree with the firing either. Like, I mean, but the high level, Powell said like the market is trying to digest all the information. What's the point of me making any decisions now if the market is still in flux? Yeah. Which I'm in agreement with.
I mean, also technically, the market is not part of the dual mandate of the Fed.
Yeah.
The dual mandate is employment and inflation.
Yeah.
It's not the market price.
Yeah. But you see how that is becoming part of the Fed's oversight, like even though it's not mandated. It's funny how that works. But all right, so the trade war, generally speaking,
it's really bad.
Yeah. So how do you feel about that?
I think the trade war is worse than what people expect it to be.
Yeah.
In terms of outcome and impact on businesses and consumers and markets. I feel like just anecdotally, over the last few weeks, retail are still in the buy the dip mode. Do you feel that? Like have you chatted with like people around you? Like, I feel like people are still in the mindset that the Fed will save them, save the market.
Yes.
And they've been buying, and there's no sign of capitulation, really. So that's one thing. And at the same time, the US stocks are still very expensive. Like, even if you assume that the forward earnings remain the same, which they're not, because they're going to get affected by the tariffs. But even if you assume that the earnings are going to be the same, the US stocks are still trading today at a PE of like 20, forward PE of 20, which is very high by historical standard. So I'm bearish US stocks. I'm very bearish US stocks. I don't know what's going to happen in the short term, but over a period of like 3 to 6 months, I think the market will wake up and say this is bullshit.
I think the market will wake up as soon as everything is finalized. Because right now there's so much uncertainty. People think that we will get a V recovery as soon as Trump announces the deal. Right? Everything is done. I'm going to walk back X, Y, and Z. I'm going to do this, and that. But people don't realize that we've been probably scarred now from all of the policy changes, even in the short term. That is going to take some time for us to recover from.
I think the damage has been done. The psychological damage on business confidence and consumer confidence has been done.
Yeah.
Meaning, like, consumers are going to spend or are going to be more cautious with spending because there's so much uncertainty. Same thing with businesses. They can't make big investments because they don't know how big the tariffs will be a month from now or 3 months from now. So everyone's going to spend less. And there's no doubt that that's going to affect the economy in a big way. Because like the 10% tariffs, like if you think about the 10%, 10% is not a small number.
Yeah.
When it comes to tariffs, it's 10%. The 10% is not on the price of the final good. The 10% is on the cost of production.
Yep.
Which is a much worse situation than a 10% on the final price of the good. Because if your business has a profit margin of 10% and all of a sudden your cost goes up by 10%, then you're no longer profitable. Like, that is really bad. And it's someone put out this chart, but the tariffs are on that even at 10-20%, it's at near the same level as what's it called, the Holly Smoot.
Yes,
in the late 1920s, early 1930s. So it's basically the highest tariffs level in history in the last century.
So reading to some numbers for you, toys in the US are 80% increase in price. So buying, what you would buy $30 toys, you'd ultimately spend $70 is like a perfect example. Average vehicle price is going to go up by 15%. So that's an increase of $7,600 on average.
Yeah.
What else did I see? Annual increase. So every household has to pay an additional $3,800, just average cost of like groceries, expenditure, things like that. And so that's some of the stuff that people haven't realized yet, that's already being impacted today.
Yeah.
So what's the strategy here? I've read, I've been down many dark rabbit holes, and some of the traders that I follow, macro experts, etc., are saying that this is kind of Scott's vision, but Scott Bessent, the Treasury, and ultimately what they want to do is stop the growth of China, because it's already a world power and it's number two, and and it could probably surpass the US. You could argue, at least that's the viewpoint that they're coming from. And to do that, the way to do that is to stop getting other countries to trade with it. And so they're trying to create a multipolar world where the US wants to use a security blanket because it's, the dollar is kind of the representation of what US does in terms of commerce and trade. And they want to use that as a security blanket to allow other traders or other countries to trade with the US, but not China. So they try to go to Vietnam as an example. And I think Vietnam just turned face and went with China as an example. They're trying to do a deal with Japan and all of these other countries. It's just an example. And so to do that, and so if that happens, if they were successful, then the GDP of China would go down, and then they would kind of succumb to the US. That's kind of the ideology of what people are thinking that it's going to happen. What are your thoughts on that?
But if that's the objective, it's completely inconsistent with execution. Because what Trump has done so far is to alienate not just China, but also all the allies of the US, including Europe and several of China's neighbors, like Japan, South Korea. And all these countries are now at least trying, or at least publicly talking with China about reducing their own reciprocal tariffs. Like, for example, Spain is going to export pork to China at a much reduced tariffs. Like, I've seen this in the news. I don't know what the exact number is, but same thing happened with South Korea and Japan. Like, China, South Korea, and Japan are the three countries that historically hated each other.
Yeah.
And now they have to work with each other somehow, at least in the public. Same thing is happening with between Vietnam and China. So it's just, the execution is just inconsistent with the stated objective. For me, more likely than not, there's no strategy. What's happening is Trump is just YOLOing. It's just making decisions off of his own gut feelings.
Yeah.
There's no planning. It's just gut feeling, which is consistent with what I think Trump is as a person, as a business person in the past. Just bluffing and, creating a lot of uncertainty, starting with a big ask and then slowly walk back down. That's
I mean, this is a negotiation.
That's the art of the deal.
I mean, like high schoolers, come on.
That's the high schooler art of the deal.
Yeah.
I mean, overall, I think it's really bad, and I think it's worse than what people expect.
Yeah, I just think this is going to have worldwide impact. It's going to be really bad for the US. Stocks obviously bearish. Apparently, I mean, I've seen tweets about how people are now, for the first time in the history of their lives, are overweight European equities, gold and Bitcoin, as a trade.
I mean, the worst thing that I'm worried about is not even the economy, is a potential military conflict.
Do you think it'll go that far? Oh, I'm sorry. Yes, with China. Yeah, you're right.
Yeah, I mean, economic hardship increases the odds of military conflict.
Yeah.
And if anything happens, it's going to happen in the Taiwan Strait.
Yeah.
Before the tariffs, I had put the odds of a military conflict between the US and China through Taiwan over the next 3 years at maybe 25%. That was my probability estimate.
Yeah.
But after this whole episode of tariffs and uncertainty around it, I think the probability now is probably 50% over the next 3 years.
If that happens, I mean, I would say under the Biden administration, I could have seen a regional or even global war of some sort. Under Trump administration, I don't know if he cares that much about Taiwan.
But he cares about looking good.
Sure.
He cares about not looking like a coward.
Yeah, it's a fair point.
I don't know what the probability is of the US getting involved in that war. But I think some sort of military conflict between China and Taiwan is going to dramatically increase.
Yeah, it's a fair point. And if that's the case, then, I mean, everything's, there's going to be regional conflicts everywhere then. It's just not going to be Taiwan and China. And that could be probably a disaster for global relations and just commerce and trade.
Yeah.
I just hope he really just fixes this shit and we just get into a mild recession and call it a day and we forget about it.
I think that would be the best possible scenario, the best thing we can hope for.
Yeah. So how does this affect startups locally? I mean, like, I could tell you, we may not get like founders from China and India as an example, but what are your thoughts?
Don't you think that venture investing is going to slow down? If the economy slows down, don't you think that'll affect venture markets as well? Because venture markets tend to lag the public markets by a couple of quarters.
Yeah, it's probably a fair statement. I think depending on where we are with AI, because AI is pretty hot right now, and I just did a quick managed search where it scraped all the data from all the YC startups over the past 2 batches, and I asked it like, what's the average valuation post demo day, and the average valuation was about 22 million for an AI startup. To me, that's pretty high, right? You want to be in the $15 million range, right? That's kind of the sweet spot. The 22 million is like without any product or even an MVP is pretty high to me.
Yeah.
And I feel like it's just going to go higher at this point. So I do think we're getting to that point where things could pop in the AI side, especially given what's happening with like, maybe not now, maybe in a 6 months or a year, but like, what OpenAI is doing with Windsurf is a perfect example of like, no one is safe in any product that they build unless they have some sort of network effects.
I was thinking how a potential military conflict would cause the supply chain disruption in semiconductors, which ultimately would affect progress in AI and definitely robotics.
Yeah.
To a large extent, robotics. Because robotics is more hardware.
Yeah. And a lot of the hardware comes from China too, right?
A lot of the advanced chips, but not the cutting edge, like not the 3 nanometer ones, but the, maybe a tier below that of chips come from China, and a lot of other electronic parts are manufactured in China as well.
Yeah. It's funny. I was reading through some stats that talked about, China's dominance in robotics specifically. I haven't looked into the humanoid side, but China manufactures a ton of industrial robots globally that people use. 51% share globally of all sales come from China, manufacturing sales.
Mm-hmm.
US, 5%.
Mm-hmm.
And that kind of gives you an idea of like, if humanoid robots were to be scaled up in terms of production and sales, like that funnel is going to be owned primarily by China and not the US.
I feel like robotics are going to follow the same path as digital AI, like agentic AI, meaning the US is going to innovate, be the first mover, and create a lot of new things. And then China comes in and makes things cheaper and more efficient.
Did you watch the All In podcast with Travis Kalanick, the founder of Uber?
No, what did he say?
Oh, dude, there's so many good gems. But
he said he was, back in the day, he was competing with the Chinese competitors. And he was so annoyed that every time he puts out a new feature, that the Chinese companies would copy it within a day. And the speed of copy was so fast that he actually developed a level of respect for these Chinese startups.
Yeah, exactly. That was exactly what he said. But it was like a week or 2 weeks turnaround time, and there's no way to compete with them, right? Because it's like you're competing with yourself at this point. And this was Kalanick back in the Uber days, and so we're talking like 2010, 2012.
Yeah,
I think we're now at a point where they don't.
It's different now. It's very different. Like
different now. Like even if you look at the BYD cars, right? I mean, these things park like in parallel. Like, I don't know if you've seen those videos.
Yeah, it's pretty crazy.
Yeah, or like, I mean, the suspensions moving, the cars moving up and down. I mean, there's just so many cool things that I've seen in these cars where I was trying to see if I could order one, and you can't buy one in the US, obviously, but it got me to that point where I'm like, maybe I should look into it.
Okay, so I was actually talking to a guy yesterday who's pretty knowledgeable on Chinese EVs. Um, and the problem with Chinese EV, okay, the good part of Chinese EVs is they look luxurious. The interior looks a lot nicer than Tesla. It's cheap, of course, and the batteries are pretty good. The downside is they're not safe.
What the fuck?
There's many stories of the cars just blowing up.
Oh no.
Like just
okay.
Like the batteries just set on fire, and then the drivers basically die. Not in a car accident, but like just the battery is blowing up. So that's one problem. You don't see that on the news because those news are censored pretty quickly.
Of course they are.
And two is FSD, right?
They don't have
that we already know.
Yeah.
Tesla is just way ahead of everyone else in FSD.
Oh, good to know. I'm not buying it.
for now. But it'll probably get better.
Yeah. What other products do you feel like China's ahead in terms of US competition?
Solar energy.
Yeah. I think they manufacture 80% of the panels globally?
Something like that. And all this happened in the last 10 years. Like it went very, very quick. 10 years ago, China had nothing. And then they started investing a bunch of money into these industries. I feel like there is a strategic, I don't know this for a fact, but I think there's a strategic reason China invested so much into hardware manufacturing, because during wars, these industries start to matter. Like China is now number one in terms of manufacturing ships, right? Yeah. Cars, solar energy, and a bunch of other hardware stuff. And these things start to matter during wars. And the US kind of lost that capacity in the last few decades.
I don't think they've even really had it to begin with. I mean, reading through the chip war book, right? Even back then, they were fucking up on the yield of chips that were being produced in the US.
Yeah.
I think they had some...
this goes back to the tariffs war. If the objective by implementing the tariffs is to bring manufacture back to the US, then tariffs are not the best strategy. The smartest strategy is just to invest in those industries. Yeah. Make sure that your own industries and your own companies are competitive on the world stage.
Yeah.
Rather than self-inflict damage on your own industry, on your own country and other countries. It's a negative sum game.
Yeah, it's a negative sum. Yeah, you just got to compete harder and faster. Reinvest in manufacturing in the US, but don't let prices come up any higher, because that's going to affect consumer confidence and everything else globally. Yeah. But I don't know. Everyone's saying Trump is playing 4D chess. So I think someone put out
how many Ds do you think he's playing?
I don't know. At this point, I've lost the count of Ds. Did you see the Zora launch yesterday and the base everything token?
Yeah, what happened there?
So the base account officially shilled a token in this case. And the token was called Everyone is for Base or something like that.
Base is for everyone.
Base is for everyone. It went up to a 15 million market cap. I was thinking about buying the token, then I'm like, you know what? Semi-bear market, whatever, I'll let it ride. Crashed to 1.5. Mm-hmm. And then I was like, I think this is a good buy here. And then people were really pissed. How did Base shill a token and rug the users? I mean, it turns out the sniper bought 25% of the token and dumped it, right? And so that caused a crash. And so there's a problem with, obviously, bonding curves and snipers. That has always been the problem, right? I mean, even with the launch of Clout, some of the tokens that we launched, snipers end up taking a bunch and dumping on the users. This is also true on any other platform. But the narrative that Zora and Base, Jesse, they're trying to create is can you tokenize all forms of content? And can content creators earn some revenue based on the content that they push on chain? And that's the narrative, right? And so I'd say 75% of crypto Twitter shitted on Base and Zora specifically. about the rug, and most of these guys are engagement farmers, and
they call it what? Content coin?
Yeah, content coin.
What do you make of it?
Oh, I was going to ask you that. It's maybe it's a narrative for normies, but for me specifically, I don't think I'm the right user for it. By the way, I've been using Zora for the past 6 months.
Mm-hmm. And what do you think?
I do like the flow. I don't know. Would you use Zora or buy content coins?
I mean, it's just a new word for meme coins, but correct. I feel like this term is not going to catch on. There's so much inertia with the meme coin terminology.
Everyone knows meme coins. Like I can tell my mom, and she'll know what a meme coin is. So it's become kind of like analogous to, I don't know, Bitcoin as an example. So people understand it really well.
Yeah.
But, I will say one thing about Jesse's and Base in general is that they're fighting hard for their founders.
Yeah.
Which I commend.
Agree.
What's new on the AI side? We talked a bit about the acquisition, but what products you think are net new that, like, if a founder was to build in that sector, they wouldn't be worried about the disruption that OpenAI could bring or other larger AI companies could bring? Are there any industries or sectors that are safe from that?
I personally think the enterprise use cases are safer than consumer use cases. And you might have a different opinion.
I do. I come from enterprise, so I can give you a few.
Yeah. But fundamentally, I think that enterprises are internally more resistant to change. So once you get an enterprise to use your product, your AI product, it's harder for the enterprise to change to someone else. There's deeper lock-in. And the reason for that is enterprises are by definition a bunch of people, whereas consumer is one person. So like if you need to coordinate a bunch of people, it's much harder to coordinate a bunch of people to switch than to coordinate one person.
Sure.
Right. So I think this is fundamentally why enterprise switching cost is higher than consumer switching cost.
All right.
What do you think?
Yeah. I mean, your thought process makes absolute sense. But in practicality, what I've seen working, alongside enterprises, that they're very resistant to change. Yes. But they're resistant to change because a lot of the products that they use, they're sold in bundles. So like a perfect example of this is in Microsoft, if you have Office 365, then you likely will have like Azure, you'll likely have, Outlook, you likely have all of the products that you're locked in for.
That's why people use all the shitty Microsoft products.
Yeah.
Like Microsoft Teams.
Yeah, Microsoft Teams, exactly. Like a perfect example of this, like Microsoft Slack killed to a certain degree its momentum of growth because Microsoft Teams was given for free for all Office 365 subscribers. And most of these subscribers are all like enterprises, right? So what I'm arguing is enterprises actually have a better chance in converting those customers to net new products because they already have them locked into subscriptions. A perfect example, even like Canva, right? Yesterday, one of our founders posted a tweet where they launched their own, and Canva is like a product for education, and these education enterprise, you can consider schools, universities as like enterprise customers, and they're all locked into this software. And so now they release a product where any kid can build an app, right? So think of like, I don't know, Lovable or Bolt or V0, and that's bolted on for free for everyone. Like all of those customers all those like V0, Bolt that were trying to go after those customers, it's gone. I mean, they can still try to get them one by one, but you need a sales team to go after and penetrate each of these markets.
Right.
But here's the counter argument, right? Which is Zoom. And I've said this example before, which is right now Zoom is dead, by the way. But but during COVID, there was an uprise. But like the example that how Zoom became successful at one point was the fact that every consumer used it, right? And because consumers used it, that bubbled up to enterprise. And so it was easier to get enterprise to change and adopt a new video platform because they were using it day to day at their homes. Same thing with iPhone and BlackBerry, right? BlackBerry was the de facto enterprise hardware device. And iPhones just became ubiquitous. And because of that, and that happened through a consumer channel. And once that consumer hit, then it bubbled up to enterprise, and it forced enterprise to change. So that's what's happened historically. Now, could this world be different? Maybe.
But you're not arguing against my view. You're arguing for something different. Like what I'm saying is enterprises are harder. Like if you build an AI product for an enterprise, it's harder for OpenAI to come and disrupt it compared to building a product for consumers.
So what I'm saying is like OpenAI could build a product for enterprise. They already have enterprise support, right? Because they were first movers advantage, a lot of these enterprises have probably already adopted OpenAI to a certain degree. So for them, for OpenAI,
you're saying because OpenAI has a ton of consumers, then it's easier for them to also go after the enterprise.
Exactly. Because they've become synonymous with AI, right? And so it's a lot easier for them to win, adjacent products within AI. And that's also true for Microsoft. There's a reason why Microsoft and OpenAI are beefing right now. There's a reason for that. I don't know if you saw that, but Microsoft made a huge... They're beefing because OpenAI is going to try to take Microsoft's lunch now, right? And because there's some sort of like competition, they moved a lot of their workloads that used to be on Azure. They're using Oracle and other providers now to counterbalance the competition that Microsoft has as well. And so, Microsoft is now building their own products, right? And they have to go win those users over. And so OpenAI is competing with everyone. Like and I think to me, they're battling too many battles and too many fronts. And, whenever you do that, you tend to fail. So
here's so back to the original question, like what type of AI apps are harder for OpenAI to come and just disrupt and just kill the startups, right?
Yes.
I think there's an advantage that a pure app layer startup has against OpenAI is that the app layer startup can choose from a variety of foundational models, and they're all different. Some of them are better than others in certain areas, and vice versa. And so, for example, Cursor and Windsurf, we talked about this, right? They use Anthropic because there's a better coding model out there than the OpenAI models. And so OpenAI cannot just build a dev tool using their own model. They have to go and acquire Cursor and Windsurf. So that's the defensibility, or one of the sources of defensibility that the app layer has against OpenAI. Does that make sense?
Yeah, it does. So it's network effects, essentially.
It's the ability to choose from different models. Whereas OpenAI only has their own one model, has their own models.
But you only get that leverage if you have distribution. I would feel like.
Right. But you only get distribution because you build something useful in the first place.
Yeah. Well, I would say in those cases, they were kind of first to the market and they really adapted quickly, right?
Yeah.
And the ones that didn't adapt, they died.
Yeah. I think it's really hard to predict which verticals are resistant to OpenAI. It's just really hard to predict.
It's going to be
because it depends mainly on two factors. One, can the app move fast enough to acquire a lot of users and have a big distribution?
Yeah.
And two, it depends on what OpenAI actually wants to do. Like which verticals do they want to go after?
Yeah.
It's really hard to predict.
Yeah. It's fair to say.
Oh, so OpenAI released 3.0 or 03. 03, right?
Yeah.
The benchmarks look pretty good for them. I think they...
people are calling it AGI near... Like, I hate these examples. Like, but have you seen those tweets where like, oh my God, it's so good. Oh my God.
Yeah, and then someone posted a simple math question and 03 couldn't solve.
Yeah. I don't know.
But 03 ranked pretty high. I think 03 ranked better than Gemini 2.5. So 03 is now the best model of its category, like a long context reasoning model.
Yeah. How is that compared to Google Gemini?
That's what I said. Like, I think Google Gemini 2.5 is now number 2.
It's now number 2, but I think Carter mentioned something, right?
That was before. That was before 03 released.
Oh. Okay, sorry, I was confusing because I saw his message, but that was probably before the release. So he's saying now Google is number 2 and 03 is number 1.
Yeah, 03 is now number 1. Has dethroned Gemini 2.5 was number one, and now O3 has dethroned it.
Wow. The space moves so fast, man. It's insane. It's insane.
But this goes back to the earlier point. Like the advantage that the app layer has is to be able to adapt to the latest models, whereas OpenAI can only use their own model, right? There is a fundamental.
Yeah. It's almost as if like model comes secondary at this point because they just need distribution.
Yeah.
Now, right?
Yeah. To me, it's much easier to switch models than to switch chains.
Yeah.
Right?
Yeah. Yeah.
I think that the AI models actually have lower moat, are less defensible, more commoditized than blockchains.
And it's funny because like, although like, like a perfect example of this is like Zuck releasing Llama 3, Llama 4 most recently. Like even that side is becoming so competitive. Like Llama 4, no one wants to use Llama 4.
Llama is so behind.
It's so behind now. And funny enough, even like the researchers that have left, like there's a researcher that contributed to Llama 3 and Llama 2 that left to OpenAI. If you looked at his LinkedIn, did you see this?
Yeah, I saw that. That was pretty funny. He's like under his job description, he said, I worked on Llama 2, Llama 3, but not Llama 4.
And so, yeah, like it's even that, like everything is so competitive. Like if you don't have money, like a war chest, you don't have the best people working for you, you have no fucking edge on that side.
Yeah.
And so the model side is done. So, Open Router and maybe like Freedom GPT that aggregates all the models is an interesting play into that world, because at least that way, I pitched the idea, by the way, the Freedom GPT.
Yeah. I
pitched it to a few people that are just normies. And I said, like, do you feel like, OpenAI is, nobody knows anything outside of OpenAI, by the way.
Yep.
I asked like maybe 25 people. No one has heard of anything else, including Perplexity. I'm sorry, including Gemini.
Yep.
It's only OpenAI that people know.
Yep.
All the kids I've spoken to, they've never heard of anything else besides OpenAI. And kids meaning like, ages from 12 to 18, sorry. And so then I pitched them all the idea like, hey, did you know this was an issue? They're like, yeah, sometimes I hate it when OpenAI doesn't respond to my questions about X. I'm like, would you like to know about X? They're like, yeah. I'm like, have you take a look at Freedom GPT? And I explained them the whole models concept, OpenAI concept. Then they finally got it, right? And so they're like, okay, I'll download it and use it. But they're not really even aware of this problem.
Yeah. The way I use AIs these days, most of the time, I would ask a question, and I would ask the question to at least two AIs. So normally it's ChatGPT and Gemini, but sometimes I do DeepSeek, Claude, because they all give me different answers. So I need to triangulate between them.
I find that certain, and we've talked about this in our last episode, but like certain models I go to for certain, I know they have key advantages. Like I know Google, what I like a lot about Google Gemini is the fact that they also scrape YouTube videos and other proprietary content, right? Yeah. And it actually like pulls up all the sources, all the videos where they pull the content from. And I think, there's a lot of like nuanced takes or information that you can find on YouTube that you can't find anywhere else.
Yeah.
So I find that to be like a really, I feel like it's an interesting wedge. I know we also like more or less discussed memory because OpenAI did a pretty big upgrade on memory. I think there's a moat there, and you don't think that way. You feel like there isn't a moat with memory. Curious to hear your thoughts on why. I can tell you my thoughts.
I think there's some moat. I think there is a little bit of moat. I don't think it's zero, but it's also not that high. Like, of course, it's useful. By the way, I'm not sure what they did exactly. Like, what does it mean to have full memory? Because I've asked ChatGPT in the past this question of like, what do you think my MBTI is based on what you know of me, right? And he gave me a pretty good answer. I've always thought that memory was already accessible, was already there. So I don't know what exactly they released with this feature.
Yeah, I don't know the exact impact. From what I read, it was they scaled up the memory side so it can remember more things about you across different conversations and pull that data.
Yeah.
I know there's like a memory button within OpenAI, and from time to time I'll reset it. This was before because I was obviously very paranoid. I'm a little less paranoid now because it's kind of good that it has some context about who I am so that it could give me better, like my answers, the answers I'm looking for is tailored to me. Like you could tell, like it's tailored to me. Like, oh, I know Imran, had issues with X and Y. So maybe this question stems from that. So I'm going to tailor that answer to you because of that. And I actually appreciate that. Right.
Mm-hmm.
And to a certain degree, sometimes, not saying this happens all the time, I get like a feeling like, oh, like it's a person, like it knows me.
Yeah.
And I get this weird feeling that I kind of push back on it because I'm like, okay, it's fucking AI, right? But if I'm feeling this way, I'm assuming there's people already having relationships with it.
It's like it's like Iron Man and Jarvis.
Jarvis, yeah. Have you felt that way?
Not yet. I don't really see it as a sentient being yet. I don't feel it that way. Yeah.
I don't feel it's sentient by any means, but the way it talks, the way it tailors the conversations to you, there's glimpses of human, like a human emotional link. Do you know what I mean?
Yeah.
Like you could empathize with someone, like it empathizes with you, right? To a certain degree. And I'm like, that's weird.
Yeah.
So it's interesting. And I think there's some moat in that, I think. Because the more connected you are with the thing and the more it knows about you, the harder it is for you to switch. Anything else that you want to chat about?
Have we covered everything? Market?
Yeah, let's talk about the market. Well, we've talked a little bit about this earlier, which is we're probably bearish S&P 500. Like I don't have, so like, well, I guess let's talk about what are you holding right now?
I'm actually selling rips on stocks. Like every time there is a fairly big bounce, I sell a little bit of my stocks, but I still hold the same stocks that I mentioned before: Google, TSMC, PDD, Tesla.
Not P Diddy, right?
Huh? No. But yeah, I'm really worried about a war, so I'm selling more of my TSMC than other stocks. But of course, my biggest holdings is Bitcoin, but there isn't much I can do with it or about it. I think Bitcoin is still probably going to trade as a mix of S&P 500 and gold.
Yeah.
And in the recent past, it's been that way. Like the Bitcoin performance over the last couple of weeks has been pretty much between S&P 500 or Nasdaq, actually, Nasdaq and gold. So I'm not doing anything with my Bitcoin yet. I can't do anything because my cost basis is basically zero, and the tax rate is like 30%. So I have to be very sure that Bitcoin is going to go down by 30% for me to sell it, which I'm not. So that's my holdings.
I sold all my equities already on the last pump. I'm just going to wait it out. I just and right now I'm just holding, I don't know, say Bitcoin, Solana, and Fartcoin on the crypto side. Fartcoin's done pretty well in terms of. I feel like that's the trenches Bitcoin.
That's the trenches safe haven.
That's a trenches safe haven.
The trenches digital gold.
That's the digital gold. And so I feel like all the capital flows for trenches that gone to shitters. I think it's actually a unification of all shitters into one directionally. It happened to Pepe. If you remember Pepe, similar market. I wouldn't say similar market dynamics, but it was like a bear market.
Mm-hmm.
And as we were coming out of the bear market, if you remember, we shot from like, I don't know, 300 million to like, I sold it halfway and it went up to like 3 billion or 4 billion.
Mm-hmm.
But yeah, so it's similar dynamics to that.
Yeah.
But yeah, outside of that, not holding much. Just gonna see where the market takes us. Cool. And the forecast. So we're thinking, so before we were bullish S&P 500 because we've said that multiple times in our pod.
S&P 500?
Or sorry, we're bullish U.S. equities before.
I was not particularly. I was long,
No,
but I also said it was very
you said
expensive.
we both said the econ was great.
Yeah.
Yeah, and so we're like, yeah, we're bullish, but this was pre-Trump shaking things up,
Pre-Liberation Day.
pre-Liberation Day.
Yeah, we weren't liberated.
Yeah, and
so
then
we were coping.
No, yeah.
Now the reality sets in.
The reality sets in.
We're liberated. The market is liberated.
Yeah,
everyone's liberated.
And we were also bullish crypto, even like in our first few pods in January, but we did feel exhausted. And I did mention in our first pod of the year, and you did too, that although we're bullish, we are exhausted. That typically means that you should sell, but we're not selling because we're crypto natives, right? Like we like to hold through the volatility. Now looking at it,
we sold a little bit, right? I sold 10%. I don't know how much you sold.
Yeah, I mean, I sold some and I bought it all back. I mean, on this big last dip. But I didn't sell a lot, like 10%, not enough for me to say like I sold. But whatever. Okay, so we're bullish, short-term bullish, medium-term bearish, long-term bullish. Is that how we want to think about it?
Short-term, I don't know. Short-term, I don't know.
Medium-term, okay.
Medium-term, I'm bearish U.S. stocks. I don't know. I don't have a strong view on Bitcoin because again, Bitcoin is sort of a mix of Nasdaq and gold. Gold is going to do well, so I don't know how well Bitcoin will do. But next year feels like going to be a good year for Bitcoin and risk assets.
Oh, breaking! Trump says Powell will leave if he asks him to. He adds, "I'm not happy with him." I think the market's going to go to shit if Powell leaves, if you ask me.
Yeah.
It may pump temporarily, but it's not good news. It's instability across the globe.
Yeah.
Cool. Any startups that you're excited about? Because, obviously, to some degree, we kind of see at least a quarter, at least we can see the future a quarter ahead to a certain degree, right? With the types of founders that we see that come into our program.
Yeah.
So I guess like if you had to call out a few startups, what startups are you most excited about?
I mean, we have so many stablecoin startups in the current batch. I think a third of the batch is stablecoins, and they're all focusing on a specific region or use case. Like use case being like remittance or yield, and we have several AI startups that are focusing on specific verticals. Right, like we have a cursor for scientific research. We have a video ads using AI video models. Oh, we have vibe coding for crypto apps. Also very, very interesting, very good team. What about you?
Yeah. Some of the startups I'm really excited about working with. The 3 to 4 that I'm most excited about, obviously one is the one that you mentioned, which is, I mean, all the ones you mentioned I'm excited about, but Poof.new, which is the vibe coding platform for crypto. I think they have a unique edge there. And the team is very strong, right? They came from like Phantom and Coinbase, and they really understand. And they built a similar product before on Flow 2-3 years ago. So they have the domain expertise to build something great here, in my opinion.
Mm-hmm.
The other one is a bit more experimental. I know how you feel about it, but Slop.club, which is a video generation platform. It uses FAL, and to a certain degree, it uses some of the latest models like Kling and Veo from Google. And the ability to get people to come together and create content and remix the content, it's kind of cool. Even being able to upload pictures and then like create some fun video models around it, it's very cool. And you're seeing people kind of interact and remix videos. There's some consumer behavior going on. And in fact, OpenAI's wedge in the market is exactly that, which is image creation and video creation.
Yeah.
And so the question is like, what are these worlds going to look like, right? I kind of see Slop as like analogous to like 4chan, but for video models.
Yeah. The core insight is the video models enable a new behavior that wasn't possible before, which is reducing the latency in video creation and remixing. Because before, in order for a creator to to create a video, it takes a long time.
Yeah.
Right? Now you can just go from a prompt to a video in a few seconds, maybe a couple minutes. And the ability to remix is similar in that sense. Like you can remix on the spot, whereas before it would have been a lot longer. So this is the core insight behind the product.
Yep. Last one is 01.exchange, which is, Photon and Bullx. You probably see the tweets today that Bullx founders aren't really responsive. They made a ton of money, and founders incentives in crypto is such that do you want to build a world-changing product, even if you're a billionaire, as an example, or hundreds of millions of dollars in your bank? Or do you want to build a product? It's one of the unique challenges that crypto founders go through. And the best ones can overcome that battle, right? Like the Pump.fund team is a perfect example of that. They're going to, they have earned tons of revenue, and, they're continuing innovating on product. Like they just announced live streaming a couple of weeks ago again. And that's a unique battle that founders have to fight. And so Bullx ended up, they kind of took the pedal off the gas. Photon, more or less, I don't know where they are from a product perspective. So 01.exchange, the team is hungry. They're firing off 24/7, and there's some unique ways to build an upgraded product for traders. So those are some of the products I'm excited about. Cool.
Great stuff.
All right. Well, then, listeners, we'll catch you guys soon. Hit subscribe if you haven't.
Stay safe.
Stay safe. As always, the views expressed in the Good Game podcast are personal to the speakers and do not necessarily reflect the views of any other person or entity. Nothing here should be construed or relied upon as investment, legal, tax, or other advice. Thanks for listening to Good Game. Don't forget to subscribe. We'll see you next week.